Hello everyone. Today we're going to be looking at a job costing question. Of course, this is a management accounting. It will come up in as a question 8. So there's a lot there, mainly to do with absorption, product costing, as well as job costing, valuating stock like FIFO and so on. So this question is going to be mainly about absorptions and then costing a job. Quite straightforward. We just have to do dividing, adding, multiplying, things like that. So we are given a table like this here, and we are told that we are McFadden. We have 3 departments: assembly, finishing, and packaging. So these departments are where we make our money, or that's where we have to, they're cost centers. The following costs relate to 2017. So you have indirect material and indirect labor, so they can be associated to how much we spend on assembly, finishing, and packaging. Now, if we go down to, we have machine maintenance costs 35,000, plant depreciation costs 70,000, light and heat is 82,000, rent and rates 90,000, and factory canteen 48,000. So none of these generate revenue. Remember, we were talking about that. So we can kind of associate, well, the assembly bit goes directly into the product. The finishing is a direct relationship to the product. The packaging has a direct relationship with the product. But machine maintenance doesn't have a direct, plant depreciation isn't direct, light and heat, rent and rates, and factory canteen. They have no relationship really to the end product. But each of these are necessary in order to create the product. So they're overheads. So what we need to do is, we're then giving the following information relates to the 3 departments. So we have assembly, finishing, and packaging. So we have different metrics to work with the departments. We have volume in cubic meters. So there's a specific overhead that will be associated with that. Floor space in square meters. So we can see that assembly is the largest, let's say, part of the building, whereas finishing and packaging are smaller. Number of employees. So the majority of employees work in assembly, and then we have finishing and packaging are much less. The same with the book value of the plant. So assembly much higher, more machine hours go into the assembly, but the finishing has more labor hours. So these are all different metrics that we need to be able to create, rates for each overhead, and then we will absorb it or apportion it into assembly, finishing, and packaging. So we're then giving a job after. So once we essentially find the different rates, the per hour, per meter, whatever, we will then have to cost a job. So we have direct material, direct labor, and then we have how many machine hours will be needed in assembly, finishing, and packaging, and how many labor hours will be needed in assembly, finishing, and packaging. We're then told that the company budgets for a profit margin of 25%. So we want to make 25% above our costs. And that would be our profit. So calculate the overhead to be absorbed by each department, stating clearly the basis of apportionment used. So this is where we look at the overheads. So machine maintenance, plant depreciation, light and heat, rent and rates, factory canteens that can't be directly associated with either department without us first, looking at it. So we have to go through each one of these, and in the question it tells us we have to state clearly the basis of apportionment used. So we have to decide, well, which of these is considered, or which of these metrics should we use to get a rate for machine maintenance. So if we think machine maintenance, well, what's the main thing that is going to, depreciate our machinery? Or which of these metrics will lead the machines to need maintenance? So volume in cubic meters has nothing to do with machines. Floor space, nothing to do with machines. Number of employees, nope. Plant valuation, so that has nothing to do with machines. Machine hours and machine labor. Machine hours or labor hours. So machine hours are going to be what we're going to be using to find a rate for the machine maintenance. So machine hours is the only thing that will really affect the machine maintenance or the cost of machine maintenance. Plant depreciation, well, however, we know that when we depreciate a plant or building, it's generally a straight line method. So a percentage of the book value. So the plant valuation is what we're going to use for plant depreciation. So to get a rate. Light and heat. So we have the volume in cubic meters, floor space in square meters, number of employees, book value, machine hours, labor hours. So labor hours, machine hours won't affect light and heat. The plant valuation, it has nothing to do with, so you could have a really expensive building, but it mightn't be that large. Number of employees shouldn't affect light and heat. Floor spacing and volume in cubic meters. So this is where it might get a bit confusing. Now, if you have floor space, square meters means it's the area. So that would only be looking at the ground. Whereas if we're heating a room, or if we have to light a room, we'd be more worried about the cubic meters, so the volume of the building. Because obviously we could have a really small roof or short roof, and that would require less money for heating than a really large roof. So we're worried about the volume when talking about light and heat rather than square meters. So that sometimes that can be a bit confusing. So the volume is going to affect light and heat. Rent and rates then is going to be square meters, floor space. So we always, whenever we're renting something, we generally base it on, well, what's the square foot or the square meter, the area of the thing we are renting. Factory canteen, well, the more mouths you have, the more you have to spend on food. So we're going to use the number of employees for the factory canteen. So that's just what we're going to be using for to state the basis of apportionment used. So on the next page, we're going to write each one of them: machine maintenance, plant depreciation, and so on. So we have each one there now. So the machine maintenance, the basis for that is going to be on machine hours. Then we have book value. And then I also added the rest down here. So we have machine hours for machine maintenance, book value for depreciation of plant, volume, light and heat, area, rent and rates, number of employees for factory canteen. This is just a working, so they're going to be all of our fractions. So what we're going to do is we're going to have whatever the overhead is, and we're going to divide it by the basis, and then we'll get our rate. So if you look at the first one, machine maintenance is 35,000 and machine hours is 70,000. And if you put that into a calculator, you should get 50 cents. So half a euro. So that means every machine hour that we have for assembly, so we can see 35,000 for finishing, 25,000 and packaging 10,000, we will have to charge an extra 50 cents on the job per hour to cover our machine maintenance, which is an overhead. So obviously maintaining the machine doesn't add value to the product, but if we do not charge or absorb our overheads, well, then we're always going to undercost a job and we're not going to make any profit, or we're going to lose money because we're not costing our jobs correctly, or not charging enough money. So plant depreciation 70,000 and basing on book value is 500,000. And that is 14 cents. Light and heat was 82,000 divided by 41,000, which is €2. So if we go back here again, so let's say the 250,000 for the assembly, for every euro value of the plant of the assembly plant, we'll have to charge 14 cent as an overhead every time we have a job, let's say. Rent and rates, 90,000. Okay, and then we're just going to do 48,000 for our factory canteen. We have 120 employees and 18,000. So that is €400 per employee and €5 for every square meter we have. Okay, so now we're going to use these rates and just add in the values here. So in the exam, you would just reproduce this table nice and quickly, but I'm just going to use the actual, I guess because it's here, I'm just going to write them in. So machine maintenance, we've broken that down into 50 cent an hour. And if we go down to the machine hours, so it's 35,000 machine hours every year in assembly that we've budgeted. So that would be 17. So if you multiply 35,000 by 50 cent, we'll get 1750 or 17,500 here. Then if we multiply the 50 cent by 25,000, we'll get 12,500. Then do the same for packaging. So 50 cent by, whereas at 10,000 you get 5,000. Now plant depreciation, we got 14 cent. So 14 cent multiplied by the 250,000 is 35,000. Multiply 14 cent by 150,000 is 21,000. Do the same for 100,000 and you get 14,000. So 14 cent by 100,000. Then we have light and heat, €2. So €2 by the cubic meter. So 23 by €2 is 46,000. €2 by 12 is 24,000. €2 by 6 is 12,000. And what you should be is really adding the three together to see, do you get 82,000? Otherwise you've done something wrong. So rent and rates, we're going to get 45,000. So that is €5 multiplied by, so the rent and rates is based on floor square meter. So 9,000 by €5 is 45,000. 5,000 by €5 is 25,000. And €5 by 4,000 is €20,000. So you can see the packaging is kind of the cheapest when we look at our overheads, because they don't use as many of the metrics. So they don't use as much. It's not as big as the assembly or finishing. It's not as big as the assembly and finishing again. It doesn't have as many employees as them. The book value is less where we do our packaging. It requires less machine hours and requires less labor hours. So we have 28,000 associated with assembly for the canteen, 12,000 and 8,000. So what I did is we had 400 per employee. So 400 multiplied by 70, 30 and 20 will give me those amounts. So in total, the total overhead we have, let's say, for each of these, and we'll just finish this off there, is 621,500, 344,500, and 233,000 as well. So what we now have to do is the total overheads in assembly is that, finishing is that, packaging is that. Now what we're asked to do is calculate a suitable overhead absorption rate for each department. So we're only using those three departments. What we're going to be basing it on is it's always an hourly rate, because we can only charge hours when we're doing the job. So we have machine hours and labor hours. So they're it's the only justifiable way we can create, I guess, charges to our customers to cover overheads, or how many hours we actually create the things, or how many hours it takes us to create a product or do a job. So we have what we always do, which reduces margin of error. So to reduce margin of error, we always pick the highest of either machine hours or labor hours. So let's say when we look at the assembly, we have to say, well, which is bigger, the number of machine hours we use or labor hours we use? Well, machine hours is 5,000 more than labor hours. So we want to make the smallest rate. So if you have 621,500 and divide it by 35,000, you'll get a smaller number than if you divide that by 30,000. And we always want to go with the smallest number as a rate because it will reduce our margin of error. Now, when we go to finishing, 35,000 is bigger than 25,000, and the same with packaging. So we're going to be using machine hours here. So I'm just going to do MH. We're going to be doing labor hours to get the rate there, and labor hours to get the rate there as well. So I'm just going to do it on the side to make it easier, but what you should be doing is writing it, let's say, on the next page. So for assembly, we are going to be doing 621,500, divide that by 35,000, and we get 1776. So that's how much euro we are going to charge per machine hour when we are costing a job. So this job costs in the assembly 65,000 machine hours. So we'd have to multiply that by 1776 to get the overheads of assembly. So to cost our job properly. Now we look at finishing and we look at packaging. So now when we're talking about finishing, we're going to do 344,500. We're going to divide that by 35,000, which is the labor hours down here. And packaging, 25,000 is the rate we're going to be going on, 239,000. So this is 956 per labor hour. And this is 984 again, labor hour. So that is all we need to do for part B. Calculate the suitable overhead absorption rate for each department. Now we have to compute the selling price of job number 747. So we'll do that right now. So this is the table we're going to use all the time. We're going to take into account our variable costs, which are direct labor and direct materials. We're going to have overhead costs, which is the rates we got, and we have to multiply them by the basis we're using. We'll then get total costs. How do we get profit? Well, we're told that 25% is our profit margin, which therefore means that whatever our costs are equal to 75% of selling price. So there's two different ways they can ask that. They can ask it as profit margin, which is the selling price is 100%, profit is 25%, cost is 75%, and then you could have a profit of 25%, which would then be based on just cost, not overall. So you have profit margin and just profit. So going back here, I'm going to fill in assembly, finishing, and packaging for direct materials. So we have 12,000, 2,600, and nothing, which is 14,600. Now I'm going to do the same for labor. So we can see 22,48750. So this will be easier in an exam to add up. So this is going to be 7,750. You can use your calculator for that. Now, the overhead costs are all based on our rates. So we're going to have 1776 multiplied by the amount of machine hours we need. So 65 for assembly at 1776. So 1776 multiplied by, was it 35? 65. Finishing is based on labor hours, we know that. So 90 labor hours in finishing at 984. $984 multiplied by 90, and we had 956 multiplied by 15. Yeah. So again, labor, machine hours. Perfect. Now, so the answer to that is 1,154 and 40 cent, 885 and 60 cent, and 143 and 40 cent, which the total for overheads is 2,183 and 40 cent. Let's just say the total costs are now 24,533 40 cent, and this is equal to 75% of selling price. So therefore we'll do working to 24,533.40. We divide that by 75, multiplied by 25. So whenever working with fractions, we get 1% and then whatever percent we want. So we know that profit is 25% of selling price. So if you do get 1% multiplied by 25, we get well, I got the selling price. So I guess if we want to get the selling price, we would do 24,533.40 divided by 75 multiplied by 100, and we will get 32,711.20. So if I get the difference between them, then you get profit. We're not asked for it, but I'll get it anyway. That is 8,177.80. So profit is that much. That's our total costs. That's our selling price. And that is part C now finished. So that's the bulk of our marks. Where are we going to get the other marks? Well, we have to list 2 reasons why a flexible budget is prepared and state what it shows, and then outline 2 differences in focus between management and financial accounting. So I'll put the solution up just so that you can see what they're telling you and how the marks are distributed. So here we have list 2 reasons why a flexible budget is prepared and state what it shows. So why would you create a flexible budget? So what they're saying is you write any 2 reasons and you get 2 marks for each one. So you could say to compare budgeted costs and actual costs. So that gives you 1 mark at the same activity level, which gives you another mark. So you're saying what that's saying there is that you have to say compare budgeted versus actual, and you also have to take into account that they have to be the same activity. So obviously you can't compare if your budgeted cost is only for 20,000 units, but your actual costs are 50,000 units. you would have to adjust the budget costs to read 50,000 units. And that's where it means the same level of activity. Or it says to show whether actual costs were exceeded or were less than budgeted costs. Okay, same, similar enough. They're not the exact same, but you couldn't get 4 marks for that because of how similar they are. So that's why you see the slash here. It's saying that you will not, if you have to compare budgeted costs and actual costs at the same activity level, you'd get 2 marks. But if your second point was to show whether actual costs were exceeded or were less than budgeted costs, you would not get another 2 for that because of how similar they are. You could say to compare like with like, to use a benchmark against which to measure actual costs. You could say to adjust budgeted costs to the actual activity level. Or you could say to help in controlling costs or to plan product levels. And this etc. means there's more as well. So what I would have gone for is to compare budgeted costs and actual costs at the same activity level. And then I would have said to adjust budgeted costs to the actual activity level. So even though they're quite similar, they are separate. But that's why I think sometimes these pre ones can be quite difficult, because you could almost state that the second point of the first 2 marks, so let's say this here, is as different as this is, but they don't see it as that. So, what can you do? Now, what is a flexible budget? What does it show? It shows whether actual costs were greater or were less than budgeted costs. So, again, very similar for 6 marks. Once you know this, you should then be able to give 2 reasons as to why you would use it. Now, looking at the other theory. So here we go, another 6 marks. That means that 12% of an 80 marker was, or 12 marks out of 80, which is 15% of this question, was theory based. So outline 2 differences in focus between management and financial accounting. So management accounting plans for the future and provides information for planning and budgeting, whereas financial accounting records past events in the form of a profit and loss account, balance sheet, and cash flow statement. So I believe that if you had management accounting plans for the future, whereas financial accounting records past events, that should be enough without saying things like planning, budgeting, and profit and loss, balance sheet, cash flow statements. So I think future looking and past looking should be enough for that. Management accounting has an internal focus and provides information to aid planning and decision making, whereas financial accounting has both an internal and external focus and provides information to stakeholders such as managers, shareholders, and creditors. Now, the one that I would have gone for is that management accounting is not governed or restricted by legislation or legal requirements, whereas financial accounting is governed and regulated by both legislation and accounting standards such as FRS. So what I would have gone for is management accounting is future looking, financial accounting is backwards looking, and management accounting is not governed or restricted by legislation, whereas financial accounting must be properly regulated because it will be used by external stakeholders. It says management accounting prepares reports as often as managers require them, whereas financial accounting usually prepared once a year. Management accounting prepares reports for cost centers, departments, whereas financial accounting prepares reports for the whole business. So I think the 2 strongest elements are management accounting is future looking, financial accounting is backwards looking, and management accounting is not governed by legislation, whereas financial accounting is strict, regulated. So that's the theory. So this is 7.5% of the marks. And this theory is 7.5% of the marks as well. So, it just goes to show that just how important theory actually is for these questions. So just as a quick recap, when we are given a question like this, now it's not the hardest question in the world, they're actually quite straightforward, especially when looking at financial accounting and how difficult that can be. However, we just have to keep focused and make sure that we're not spending loads of time on this. There's a lot of dividing and getting rates. Once you then get rates, so one of the most important things is actually finding the correct basis to absorb it under. So if you use cubic meters in order to do rent and rates, that would be wrong. you need to do square meters because we're looking at area whenever you rent something. So a lot of these you have to pre-learn, even though they are quite kind of common sense, or it makes sense that you wouldn't be doing labor hours with rent and rates because they are two independent, they are both independent of each other. But still at the same time, you just have to remember that. The other thing that's quite important is once you have your overheads divided into each department, so assembly, finishing and packaging, it could be A, B, C, it could be whatever, you will always be asked to get an hourly rate based on machine hours or labor hours. And you always pick the highest for that particular department. So we said that machine hours was the highest number of hours per year in assembly, labor was the highest for finishing and packaging. Then we have to do a job. So be careful of profit margin and profit. If profit is 25%, then it would be 25% of costs. Whereas if we have a profit margin, it means that when you have 100%, which is equal to your selling price, that will be broken down into 25% profit and 75% cost, so expenses. And then of course the theory as well is quite important. So I will leave that for now. I hope it makes sense. If you have any questions, please feel free to watch out. And I'll catch you in the next video.